Hey everybody, Adam Pospisil here from the Pospisil Realty Group. I'm going to bring you through a very quick mini market update. The market is undertaking a dramatic shift, and I want to just show you some of the reasons why that's taking place and what our take is on where things are headed. So here we are. This is what everybody's always curious about. What's happening with pricing? Well, pricing has been softening since last month. If we have a look at this chart up on the screen, we can see it's anywhere from 1.6% right up to 2.4%, depending on the type of property. That differs a little bit area to area. We'll break that down for you and talk a little bit about why there's some variation there. So what's hot and what's not? Let's just chat a little bit about Vancouver, whether we're in a seller's market, balanced market, or buyer's market. So we're going to just jump through a couple different sections here of different home types and areas within the city of Vancouver. So here we can see detached houses for the west side. They are in a buyer's market. We can see that's been steadily sliding there from the previous months up there on the screen. Condos and townhomes for the west side, hanging on a little stronger there in a balanced market, so a bit more stability there. Downtown, that is in a balanced market, just teetering on the edge though of what would be buyers. Vancouver east side, also in that balanced market at 14% for detached. Very interesting to see, condos and townhomes for the east side, still in a seller's market, primarily driven by affordability. We're going to talk a little bit about that with interest rates, but we can see that is still holding on in that seller's market. Okay, so let's talk about it going across the province here. That's pretty consistent. We just chatted about Vancouver, but if you go out into the Fraser Valley, Tri-Cities, we're seeing a very similar story. So you can see as a whole there we've fallen into that balanced market category across the province. So. And we look at MLS residential home sales right across the province as well. We can see those are pretty steadily falling. So we have a decreasing amount of sales. And that's been happening since the peak of our market back in the spring. So what's happening with prices? Well, essentially prices are falling across the province, very consistent with what we looked at there in that first summary page. So let's talk a little bit about a forecast. Now, of course, there's a lot of factors that are affecting our market and some things that are kind of looking like they may come out of the blue or not to affect our market. So let's talk about a few of those things and how those will influence our market to either go up, down, or kind of remain the same as we approach the end of the year. So here are the main market drivers. We've been talking about these in our previous market updates at great length. And where they're at now. So inventory levels are still quite low in many categories. That's beginning to change. And in the categories that are softening the most, the inventory is coming up and the demand is coming down. So it's our classic law of supply and demand. But if that inventory remains low, those prices are going to sustain. Primarily, there's quite a bit of pent-up savings. Some of that has entered our market. That's becoming more challenging because of our next factor. People are putting less of that money into the market. The confidence has fallen a bit in real estate across the country, in British Columbia and in Vancouver. Basically, a cost of borrowing, as you've been probably reading, interest rates have been steadily on the rise. We're going to look at some information on that to chat about where things are going. Okay, consumer confidence, that's falling. There's more concern about where things are going from the economy as a whole and as well in the real estate market. So that makes people pull back and less likely to make a purchase decision. Unemployment is up, that will play into that, but still at a very low point. Cost of borrowing. So this is one of our key factors, and this is what we expect next week as we come into the interest rate announcement, expecting probably another rate increase on the October 27th announcement date. But we're seeing some pretty dramatic increases in interest rates, and that's really affecting people's ability to get approved for mortgages and also what they're getting approved for. And that's taking some buyers out of the market or taking them from a home category and price point that they were in, and they're being pushed or squeezed downwards because of their approval based on the interest rate down into a lower price point. So that's cooling the market across the board. And really that's a result of inflation. You can see on the screen there, we're at a 25-year historical high. And until that inflation rate comes in check, it's going to take some time for that, and those interest rates will keep on climbing. So our take on this is as the interest rates are going to be elevated, as long as inflation is elevated, it's going to really take a decrease in inflation to see those interest rates get pulled back. And that's going to take some time. Inflation is proving to be very, very stubborn to deal with, even with some dramatic increases in that rate so far. So looking like it will be a year or two perhaps before this inflation rate starts to come down. But again, many factors at play that affect that. So, and then inventory levels, we talked about that. Those are starting to build across the province. It is coming up. Again, in certain categories, it hasn't come up quite as much, and that's why those are not changing too much. But this looks like it will continue, so our take on this is prices will continue to soften as the amount of listings for sale continues to rise. And again, if there's a big uptick there as well, that can start to soften prices more dramatically and quickly. So what's next for prices? This is the other question that we get all the time. What's happening? What's our take on that? Well, there's a few factors that we're closely watching to see what's going to happen with that beyond some of the things that we just chatted about there. So of course, interest rates, this kind of shows where we were this year, where we saw our peak, and where we've come down to now. Basically, interest rates, if those continue to rise, that will continue to suppress the market. There are some taxation questions that are being sort of thrown out there by both the provincial and federal governments, some higher taxation if you sell within a certain period of time, the cooling off periods that are coming to British Columbia, basically the ability to walk away from a deal within 3 days, that will be in the new year, and the consumer confidence, what happens with that. And then the listing inventory surge, talked a little bit about that already. If that does come up, that will affect things right across the board. So in summary, what's our take? Well, prices are softening right across in most homes and area types. We can see that in that graph. We expect that to continue as long as these factors go. We don't really know when it will shift. That's the tricky part. Nobody really knows when the market will hit bottom. And so at the moment, that's where we're at. The timing and the amount of decrease depends on inventory. So we've talked a bit about that. Is inventory rising? Is it not? That will need to be sort of figured out in each of these categories, and then we'll know what's happening within that. So some of the upcoming law and regulation changes will have an impact on the market, and that's kind of to be determined. When those come in, whether those get watered down from their current sort of proposed style. So we'll see what's going to happen with that. But in summary, some of the more expensive properties are less active, and we're seeing some greater price decreases. So what does that mean? Where's the opportunity in this market? Well, it's a great time to buy, especially in certain categories in those higher end price points. As values are falling, there's better value to be found there versus where we were in the spring or even last year in certain categories. So it's a great time to buy. It's also an excellent time to make an upgrade because those more expensive properties have fallen greater in value than the less expensive properties. There's a good opportunity there to make a jump up. So that's our take, is in this market, great time to buy in if you can get approved, great time to buy an investment. If you can get approved for that as well, the rental rates are quite strong still. But last but not least, if you can purchase upwards and you have some equity in the market, great time to do that as well. Thanks for joining us. We'd love it if you'd follow us on YouTube, on Facebook, give us a like, subscribe. We'll keep you up to date every month on what's happening. Have a great day. Happy Halloween. Take care.